Welcome back to the channel. If it's your first time on the channel, welcome. We talk about business, personal finance, investing, and success. Today's video is on why do stock prices go up and down. So the primary reason is every day the market is open. There's either a lot of buyers or a lot of sellers. So it's all about supply and demand. So if there's a lot of buyers and basically there's a fixed amount of stocks that you can buy every day, then prices are going to go up. And then on a day where there's not a lot of buyers, then prices can go down because there's not a lot of buyers to continually to buy into the stock market. So that's the primary reason, is just the amount of buyers and sellers that show up each day. If you have a lot of product and very little people to buy it, then of course prices are going to go lower. But if you have only so many fixed amount of things that you can sell, you have 10 things and you have 20 people show up, then the price is going to go up because more people are willing to pay a higher price for the same item. And then another fundamental thing in the stock market that causes it to go up long term is understanding who is actually buying the stock market. So there's basically there's three main drivers of people that buy the stock market, and the number one buyer of the stock market is corporations. Corporations continue to buy back their own stock, and then they also invest in other businesses and growing their own business. So corporations are a huge driver of the market activity as far as buying more shares and making the market go up. The number two buyer is governments, local governments, I guess even countries, governments. The central banks are buying stocks every day. That's a main driver of the stock market. So central banks are, corporations are, and then households. 53 million households in the U.S. Have a 401k account, which they buy stocks through their employer every month. And then there's several people that have individual stock accounts set up that they continue to buy stocks in every 2 weeks or every month, which is a big driver of the stock market going up. And then foreign investors also, foreign corporations also buy stock market, foreign individuals buy the stock market. So there's all kinds of people that are investing in the stock market. And the people that are investing in the stock market, they have good incomes, they have good jobs, they own businesses, they continue to make a lot of money, so they can invest a lot of money. So it's a main driver for the stock market, always going up. Corporations that are buying it, foreign governments that are buying it, foreign investors, central banks, and then households continually to buy into the stock market, which will continually to make it go up and up and up for the rest of our lives. So continue to learn about the stock market, to study it, because the more you know about it, the less risk you have. Risk is a function of knowledge. So the more knowledge that you get, the less risky investing in the stock market is. And then if you haven't seen those other two videos that I did on index fund investing and then dollar cost averaging, go ahead and check those out. It's the way I've been investing for the last 10 years, but I've been investing in the stock market for the last 20 years, but I've learned new ways and better ways as time goes on. So check those out, and hopefully they'll be beneficial to you. If this is adding any value to your life, any value to your financial education, hit subscribe, ring the bell, and leave a like on the video. And thank you so much for watching. We'll see you in the next video.